We got some questions at the end of the discussion we had at the Swan Salon in New York on Wednesday night. And it would basically boil down to who's selling. Who's selling right now? We're getting these huge buys, this news of all these huge buys, and we're just ranging, consolidating between 105 and 92, 107 and 92, basically, is where we've been for since November. Who's selling right now? Who's buying? We've got this, the realized cap is a good chart, a good metric to look at, try to figure out who's buying, who's selling. This is a great one here. Chain analysis with a grain of salt. It's not perfect. There's some guessing and assumptions that are made in these metrics, but they're directionally interesting over a period of time. So we've got new whales accumulating here now, and old whales are not accumulating as much now. They're satisfied with their stacks. They're probably selling as well. This is institutions, Abu Dhabis and Wisconsins and MicroStrategies of the world accumulating big numbers now. And realized cap, who's got the definition of exactly what a realized cap is? It's basically where people bought in. The higher the realized cap is basically indicating new buying, like new people coming in and buying up highs instead of holding from a long time ago.
Yeah.
And in a bear market, you'll see a lower realized cap because people aren't buying at the new highs or new lows as much anymore.
It makes sense. It's almost like the arrow of causality is reversed, and it is not that big new whales come in during bull markets. It's that big new whales coming in creates bull markets.
Yeah. Here's the quick chat GPT definition, because I don't think I did a great job. Bitcoin's realized market cap represents the total value of all BTC based on their last moved price. So providing a more accurate measure of market valuation by accounting for actual transaction prices rather than current market price fluctuations.
The thing you guys might see in Bitcoin terminology is also MVRV, which is market value to realized value.
Okay.
And that's like another, in finance jargon, they might call it, that's like market value to book value, which really just means like your cost relative to the current market value. Yeah, so that's all kind of describing the same thing. And I think in the chart, if you look at the y-axis, it's only like a few hundred billion. And I don't know exactly how this was put together, but it might just be looking at, presumably, because it says whales of both,
Yep.
It's just looking at addresses that have a significant Bitcoin balance. So it's not like the entire
Correct.
Bitcoin, all holders have a total realized cap of 200 billion. It looks like it's just looking at whales here.
Sure.
And one key point on that one, John, looking at the MVRV, is essentially you're getting a ratio of how up or down the holder base is. And so you get a sentiment of, do the existing holders feel like they're in the money, in which case they might start to sell, or are they down in their position or not up that much that they'll wait for a future thing. And historically, MVRV gets in the 3 to 5 range. So you're up 3 to 5x on your money, and hodlers en masse dumping there. Sometimes it spikes up to 8 or 9 in very short periods, but right now we're at 2.4. So the average Bitcoin holder is up 2.4x on their money, in which case we don't expect a ton of selling at this price, but starting to.
Yeah. To that question of who's selling, I think people commonly ask this question when there's a lot of good news and price isn't going anywhere. But I think it's two things. One, you've had 4 or 5 different shocks to the market in the last month. You had DXY and 10-year getting way too high. You had the DeepSeek panic. You had 3 weekends of tariff fears where Bitcoin's the only trading asset that gets sold off. You had trade war tensions. There's been a lot going on. It has not been a smooth time. I think a lot of people sold from that, coupled with the fact that a lot of these people are up 100% on their coins in a couple months. And so it's like you've doubled your money. Not everyone has this deep long-term conviction in Bitcoin, and all these negative headlines start coming out. Yes, there's positive news on Bitcoin, but what if there's a trade war? What if the S&P sells off? What if CPI is too hot? What I'm seeing is the market has really been shaking those fears, and the S&P is I think it's at an all-time high, basically an all-time high today. And it's overlooked all of that. It's gotten through the tariffs. It got through CPI being too hot. It got through retail sales being too low. And, how the market responds to bad news is as important as the bad news itself. I think it looks pretty good, but I think holders have really been tested across asset classes in the last month and a half. So for me, that's where the selling's coming from.
And that's your I think that's, embedded in the question that we got in New York a couple of nights ago was like, yeah, why isn't the price higher? I've done my homework on Bitcoin. Why are not more people not seeing this? And I get that perspective, but just to flip it on its head, like that's your opportunity, right? If you were and that applies to any investment. If you were an early investor in Apple, Amazon, you understood the story, right? You probably were asking yourself the same question, or Nvidia is a good one, right? There were people that probably have invested in Nvidia when it was like $100 billion company. And they were probably telling themselves, this thing has so much potential. It should be $1 trillion company. And they were right, but it takes the market a long time to see that. So that's your opportunity.
100%.
Brandon dropped this chart for me to pull up.
I think the key here, I can navigate this one. The green line in the background, that's Bitcoin's price chart going back since 2012. It looks, so we see multiple cycles. The yellow is the MVRV, so that's the ratio. How up or down are those hodlers? And you see those giant yellow spikes corresponding with the previous cycle peaks. So as you would expect, investors are up a lot. Market gets a little frothy. They start dumping when they're up a lot. And this cycle, we topped out at 3, so the average hodler 3x as of a couple weeks ago. And so we're nowhere near last cycle's peak. Maybe this isn't something we should look at going forward, but it would be very surprising to me if Bitcoin tops out here.
I couldn't agree more. We're not there.
We have not seen anything close to euphoria.
No, and the market structure is so different. I'm just not expecting a repeat in the same way this time. I think this cycle goes on longer. I think it's milder in some ways. I don't think it has like giant parabolic run-ups. I also don't think it has these huge drawdowns. We've seen that already. The market structure for Bitcoin the last year and a half has been a massive pump, then trading sideways for months, then another massive pump. And until that gets broken, that is my base case for what continues to happen. And it makes sense because why would you sell down Bitcoin 30%, let alone 50% here? The environment is too constructive. Too many people still need to build a position. But that doesn't mean it can go straight up forever. And it's actually good for us that it's not. If you have that massive pump, like the party's over after that point. Yeah, maybe you hit 200K, but guess what? Like it's done now. And the market is going to digest that move for a year. What we're seeing instead is still awesome moves higher, 100%, 50%, 60% at a time. And then it digests it in a 15% band for 8 months. And I, for one, would take that any day over the previous structure.
Yeah, I think, what we have been talking about for months on this show is that I've been saying it at least for months on the show that we're going to see much like the floor, I'm sorry, for these drops during this bull run. Like normally, like in 2017 and 2020, especially 2017, we had 35 to 40% pullbacks during the bull market, and it just climbed right back up again, but it shook a bunch of people out. I think the floor is going to be lower now and moving forward. So 20%, 25% max, I would say, like wicks of 25%, 20% maybe. And then instead, we're going to just get consolidation across a 15 or 20K band for a long time, then just gaps up. And that might be what we're looking at. So it's more, the chart's more like this instead of
staircase.
Yeah, more of a staircase.
I think that's entirely possible. I'll just throw a potential wrench in that would be if the Trump administration is serious about these like really big reforms to the financial system, to the global trading system, this restructuring of global trade that we've talked about on this show, you could see some market volatility there as the market tries to digest what's happening. Because these might be like changes in policies that have been in place for decades. And my view is if you see the S&P down like 5 to 10% in a very brief window of time, I think Bitcoin sells off pretty materially. And if it's after Bitcoin pumped a bunch and then you get some sort of headline that people don't know how to digest, S&P's down 8%, like Bitcoin could sell off big there. So I'm rooting for the staircase, honestly, that we just get new adoption comes in all the time to just get a new floor. But I think people should also brace for potential volatility, because I think there's headlines that might come out of this administration that we might see that like we haven't seen in my adult lifetime.
I think whenever you're talking about these things, like, yeah, if the stock market goes through a huge volatility event, that can throw a wrench in things. And I think that's just a given at any point. If we actually saw assets which haven't really materially crashed, and I don't really even count COVID because it was really pretty brief, it was a fantastic opportunity. But like a true cat crash throws a wrench in things. But without that, I think barring there isn't an economic calamity, a world war, blah, 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 I think you do have a pretty golden window for Bitcoin here, where if anything, like I think the volatility risks are to the upside.
I like John's point here. It fits into the fourth turning, the looming sovereign debt, tensions with China, Russia, etc. And so I do expect massive volatility all over the place, unrelated to Bitcoin. And yes, Bitcoin will get nuked in those situations for sure. But when I think about this, the optimism in my mind is no matter what the outcome is, if we have a sovereign debt crisis or we don't, or we change to a multipolar world, China rises, US declines, I would fade that. But there's a chance that happens. No matter what we look at, does Bitcoin do better on the other side of this change? And I can't find a scenario where Bitcoin is worse off after a potential shakeup.
Agreed with that. I think the volatility is going to come from the fact that market participants don't know how to respond to some of the headlines they're seeing. So it might be like short-term vol, sell things because I don't understand what's happening, sell risk assets, meaning stocks, meaning Bitcoin. But then like after they digest it, and there's probably going to be like more headlines, right? Like maybe there's some headline that they think, oh, stock should sell off. And then a month later, there's this Plaza Accord 2.0, or what's being called a Mar-a-Lago Accord. Like that happens. And then people are like, oh, wait, the dollar's being coordinated, devalued, like stocks should pump, risk assets should pump here. So I think like some of these vol events might be short lived. It obviously depends on how things play out. But my prediction is that most vol events that happen in 2025 will be a buying opportunity. Again, subject to the details at the time, but that's what I'm seeing for this year.
So I like this is a topic, and I don't have my mind made up, and this is a lot of kind of shooting from the hip. So first, let me just say, I agree with you. And like we've seen that, like even just in the tariff headlines, the trade war headlines, like the market freaked out and then it got its wits together. And you saw these kind of headlines that wouldn't be coming out of any other administration, coming out of the Trump administration. And I think, yeah, we see more of that this year. But beyond that point, there's like a thing that keeps coming up in these discussions, which is what if Trump's serious about reforming the deficit? What if Trump is serious about Doge and like cutting spending and these things? Isn't that bad? Isn't that like bad for assets? And I get why people are saying that. They're looking at, oh, all this money printing, all this government stimulus and spending, it's driving the economy, it's driving asset prices higher. And that's, of course, true. But something in me just I struggle to think that if we actually took this incredibly wasteful spending, which is non-productive, which does not really effectively cause capital formation, creates a ton of noise in markets, and you made that better, I have to think that's good. That's good for America. That's good for assets. I think it's more of a second order effect. You no longer have like as much of the printing, as much of the raw like inflationary stimulus. But on the other hand, I have to think things just start to function better. And that's bullish in its own way.